everyone, and welcome to Startup Central. This is the first and only daily show in India dedicated to startups and entrepreneurs. I'm Avan Dabash. Well, our big story for the day is Ola's mega funding, where they're looking to raise close to $2 billion. We'll get to that. We've got some guests lined up as well. But first, let's kickstart the show, giving you some perspective on number crunching in the VC space. What are some of the big deals that have taken place? Well, the first one is remember, you've got 6 deals worth about $21 million that took place this entire week. Amongst the top VC deals, it's Rupeek, which will be seeking close to $12 million in funding. You also have SignUp, which has raised close to $6 million, while Serve Tech has raised close to $1.6 million. It's cricketer Chris Gayle as well, who has bought stake in AR startup, that's FlipApp, as well as Rajan Anand, who has backed matchmaking app maker InClove. So these have been some of the big deals that have taken place, close to 6 deals in the VC space in this entire week. But the one deal that we're focusing on full throttle today would definitely be in the online cab aggregator space. And it looks like the competition is only heating up. Reports suggest that Ola is on its way to raise a whopping $2 billion. This is from the likes of SoftBank and the Chinese internet conglomerate Tencent. We've got my colleague Rahul Dayama. He joins in from the Startup Hub in Bangalore, and he's going to give us some more details on this. But remember, this would definitely heat up the overall competition right now, where you do have players such as Uber as well, who currently have quite a big presence. In fact, let's connect then first up with Mrugang Gudgutia, Head Consumer Internet at Redseer, who joins in on the phone line. Thanks so much for being with us. To start off with, how are you looking at this fund infusion? If it does come by, you have a sum of close to $2 billion that's really been looked at. Do you think that this money would help Ola to continue to really up its game?
Definitely. I think this is a very much needed investment by the Indian cab aggregators market. And I think what we believe is that, not only will this sort of heat up the competitive game much more, we see that Ola should be able to take the fight to Uber much more closely. But more importantly, we believe this funding will give the industry a kind of platform to develop their platform over the long run. So right now it's all been about price wars, discounting, giving cheaper fares. But this should give them some kind of funding to invest, to develop their long-term strategy, maybe go into smaller cities, maybe invest in technology. So I think it's a combination of short-term and long-term win for the industry, which this funding will enable.
Yeah, and regarding the data in terms of market share, that largely indicates that Ola has an edge over Uber. What do you think has worked for Ola?
So I think they have benefited from multiple factors. So they had a definite kind of first mover advantage. They also offered cash payments right from the beginning, which Uber was, of course, late to offer in the market. And they had a very big supply of drivers right from the beginning. So you could just book a Ola cab and expect the drivers to come in really quickly. So together you have a good brand recall, a cash payment facility, big driver network, and then of course innovations like Ola Share and Ola Select Pass, all those other things. So together these 3-4 things have consistently historically given Ola the edge in the market.
Oh yes, indeed it has, and the strategy has really worked out for them. Unlike Uber, that perhaps has not been able to spread themselves too thin in a lot of cities. While Ola is going deeper into some of the smaller towns, do you think this is the right approach for them to go, or do you think that perhaps adopting a different approach would be more prudent?
So, of course, Ola has been operating in, I think, more than 100 cities for quite some time now. But what all the data points show is that most of the business for both the players still comes from the top 8-10 cities. I would say even to the extent of more than 70-75% business comes from the bigger cities. So while, of course, Ola has expanded, but I would say the market in the smaller cities is still a bit nascent in terms of sort of adopting the cab aggregator model, which means that a lot of innovation and investment is needed by the companies to develop these smaller cities, which is where we think this funding could be deployed by Ola in the future to maybe develop these smaller markets better.
Okay, stay with us, Mrigank. I really want to connect with you and talk a little bit more about the overall competition that's heating up within this space. But in the meantime, I'm going to take it across to my colleague. He's joining in from the Startup Hub, that's Bangalore, and Rahul Dayama is with us. Rahul, if this funding goes through, you know, we're talking big money, $2 billion. That's a lot of money. They're going to take on Uber with this hefty sum.
That's right, Avan. 2 billion all in all is really a massive funding round. And if this entire round goes through, it will be the second biggest investment in the startup space. Because remember, SoftBank Vision Fund had backed Flipkart, and that funding deal was valued at about $2.5 billion at what SoftBank had invested. But this time around, remember, this is not a one-off round that is really taking place. Last November 2016 was when Ola raised about $250 million from SoftBank. They raised another round recently. They've also closing a round with Tencent, according to some reports, of that is 40 million. So this is an ongoing round, really. So over the next few weeks is when entirely this will be official. But these are smaller chunks of money that Ola is raising, keeping in mind the bigger aim of 2 billion. So as you pointed out, there's SoftBank really in picture. Also, there is Tencent, which has been betting big on the Indian startup ecosystem. Tencent coming on board would really give Ola another strategic investor apart from SoftBank really on it. Also, you have the UCT Ratan Tata backed fund that is also taking part, and some other early investors also who are betting big on Ola. So yes, you're right, 2 billion is a lot of money, but this is really going to come in a phased manner.
Okay, thanks very much, Rahul, for joining in and breaking that down for us. Mrigank, you know, I was talking about how the overall competition in the space now is only going to hot up. We've seen that there have been price wars in the past that have taken place several times. If Ola does manage to garner this $2 billion, there could be room for further discounts, further aggressive pricing on the anvil.
Right. So I think discounting is, of course, going to happen in of course, a bigger way going forward. Especially as I talked about previously, in the smaller cities, you might see the game hotting up even more. Of course, bigger city will always see a chunk of discounting increasing. But along with the discounts, we really believe this funding is going to motivate Ola to sort of put in more money in their long-term investments, you know, maybe in developing their technology, coming up with new ride innovations. So, you know, we had carpool, we had autos. Autos is a very big growing market. We see tremendous growth there. So maybe they would want to invest in these smaller pockets of growth and try to sort of drive their overall growth, not just from the usual cabs, but all these newer sort of transportation models, because that is what is needed in India. We see these online models accounting for barely 5% of total rides taking place. So it's a huge opportunity, and I think that's where investment is going to go.
And, you know, while perhaps it's too early in the day to assess, do you think India can have two major players in this category? Because there are, of course, reports that indicate that SoftBank is eyeing a stake in Uber. If that happens, the overall equation also changes completely, which would mean that there would be two players really dominating the space.
Correct. But I think, in terms of domination, I would say that right now the market, the way it is, we can still have two sort of big players working side by side. Both of them can focus on different categories and sort of still have a good growth coming in. For example, Ola could increase its offering in rentals, in autos and other categories where Uber is not really focusing on. So that could be a big independent niche area for it, and Uber could focus on the metro cities, the shorter rides, and so. So right now, I think the market still has a long way to go before the kind of consolidation seen in China takes place, where, you know, something like Didi takes 80-90% share. So I think there is space for both to survive as of now. Of course, if SoftBank comes in and sort of tries to push for some kind of Uber stake and then maybe a merger, then things would change, but unlikely as of now.
Okay, Mrigank, let you go on that note. Thanks very much for joining in and giving us a view on the overall fundraise and what it would potentially mean for the sector as a whole, as well as for Ola. And just to sort of sum up what my colleague Rahul was saying is that, of course, it is a massive amount that Ola is in talks to raise, but it would happen in tranches, the entire $2 billion. As of now, we've not managed to garner a comment from either SoftBank or from Ola, but what we understand is that Tencent as well as SoftBank are some of the big investors, and you have others like UCRNT as well that could perhaps participate in this fundraise, and this would mean that it would be the second largest funding round. Remember, Ola has already last year in the month of November raised close to $800 million. So that's the big story right now. The things would likely change and go in the fast lane for the cab aggregator space. For now, we slip into a quick break. Stay with us. Got lots more lined up on Startup Central when we return. Thanks for staying on with us. This is Startup Central. Let's get you a candid chat then. This is with the former Tiger Global Managing Director. He's now the founder and CEO of Great Learning, Mohan Lakshmaru, who is giving out some special advice and special tips to professionals who are working as well as entrepreneurs in order to succeed in their respective fields and on the work front. Let's have a listen.
There's a lot of professionals, and it's a need whose time has come. So that's what kind of motivated us to start looking at that segment. And then once we started doing that in 2012, we realized that pure online learning has very mixed results in our country. Right? There are certain things that lend themselves well to be learnt online, but there are many things, particularly things that are more intangible or problem-solving oriented, that don't lend themselves well to self-learning online, right? And those are the areas that we wanted to focus on. So after a lot of experimentation, we came up with the blended learning model, where we felt we could replicate the best aspects of traditional classroom learning with the benefits that technology gives you to create a format that fits into the busy lifestyles of working professionals, but while still achieving high quality, robust, impactful learning outcomes.
Okay, take to us, through some consumer trends really at Great Learning itself. Any specific fields that you're seeing a lot of these working professionals? We're talking about the doomsday for the IT sector really, with job losses and whatnot. So which sectors are you really seeing this demand coming from, or is it really across different fields?
Yeah. So as with any trend, there are the early adopters, there are the mainstream, and then there are the laggards. Right? So with the adoption of digital that is happening globally, right? So all things are rapidly becoming digital, right? So what do businesses do when something like that first happens? They go to consultants or they go to people that they can outsource to, right? So that's where the demand first came from. So it was people from IT companies, people from consulting companies. And then it was financial services, right? Because financial services usually adopt new technologies much faster than other sectors. So in the first couple of years, we saw a lot of demand from folks in these areas. Then, as things became more mainstream, right, I think traditional businesses started investing in digital as well. They started building capabilities in-house, right, rather than just depending on consultants, right, or depending on outsourcing, which means that folks that they had internally saw the need to upgrade themselves. So then we started seeing demand from automotive, from healthcare, from pharmaceutical, from manufacturing, right? So pretty much the broad spectrum of industries. So now there is demand everywhere.
Why is this really a conscious decision for you to ensure that you'll build a solid business model out there? Because we also sort of have a steady revenue flow that you're seeing. So was this really conscious that you would not look for external money at all? And would you stay this course till as long as you can?
See, I think it was never a decision not to take money. That was not the driving. It's basically about first proving a value proposition, right? If you can prove a value proposition, if you give enough value to your customers, right? And the true test of that is, are they willing to pay for it? Are they willing to pay enough for it? Right? So one of the advantages of being an investor and the experiences that I've had is that I got very good training and exposure on what makes a good business and what is not a good business, right? So, and I've learned from very, very smart people that if you can build a business without depending on external capital, that's the best way to build a business, right? That's, so many great businesses have been built with very little external capital, right? Not having external capital also forces you to have a certain discipline, forces you to innovate, forces you to be as customer centric as you can, right? Gives you a razor sharp focus on validating your value proposition, right? All of those things which are very good for business, right?
Got it.
So even in India, we have fantastic businesses like Zoho, which has been bootstrapped for a very long time, and there are many others, right? BrowserStack is another one which you probably know about, right? So the other thing I learned is that the best money that you can raise is money from satisfied customers, right? And as long as you can keep raising enough of that, I don't think you need investors' money.
Your own journey as an entrepreneur, what is that one or two, piece of advice that you would give them on their journey? Being an entrepreneur, then an investor and an entrepreneur again, so can't be better. So one or two pieces of advice that's worked for you.
See, I think big challenges happen when you actually forget the basics, right? And you get carried away. I think that's when you lose track of the basics, right? There's a temptation to scale before you have actually validated the value proposition, right? And I feel that's not something that's emphasized enough, right? The initial signs of acceptance can often be misleading, right? And you may feel that you've cracked something, and then you put in a lot of money behind it to scale, and then discover that actually, you haven't actually validated your value proposition,
sure.
right? So one of the things that I was very clear that I did not want to do is that use investor money to buy customers, right? If you have to buy customers, that means you haven't convinced them about your value proposition, right? So one advice is that it's a very basic thing, but focus on being very rigorous about validating your value proposition.
Okay, moving on, let's sum up some of the big deals that have taken place in the VC circle this entire week. That's the week ended September 25th. Remember, there have been 6 big deals that have taken place worth a total of $21 million. Let's start off with the first one, and that's SignUp. That's a software provider. It helps companies manage their overall online presence and reach, and they've raised close to $6 million. This is in a Series A round by Vertex Ventures. That's what the company has said. And remember, the biggest competitor in the US is Yext, and they recently went public, raising close to $115.5 million via an IPO in the month of April. Moving on, then Transurf Technologies, that's a company that offers geospatial technology-based SaaS solutions for urban planning. They've raised close to $1.6 million. This is from IL&FS Investment Managers as well as Omidyar Network, and this is in a Series A round funding. And this was facilitated by Tribe Impact, and that is an impact-focused angel network that facilitates investments at an early stage for investors. Meantime, let's move on to the other big deal that took place, and this is none other than cricketer Chris Gayle, who picked up a minority stake in augmented startup reality firm that's Flip AR. Chris Gayle will now be joining the Bangalore-based startup's board. He will also be helping to promote the products as being a brand ambassador. And this investment in the company comes just months after he invested an undisclosed amount in another Bangalore-based AR startup by the name of Iona or IONA. And moving on then, all eyes set on the contentious Uber meeting where the power of the ex-CEO Travis Kalanick will be decided. What is going to be his role? The meet is going to consider proposals to diminish his influence and the early investors as well. The voting power will be decided. He contends that fellow members are moving a bit too quickly with the restructuring. He wants to defer that decision on governance changes. As of now, it's a bit unclear as to how many measures will actually be taken. But remember, this is an all-important meet because by and large, it's going to decide the future course of what the former chief executive Travis Kalanick is going to be. As of now, they will be discussing each issues. They will be talking about the addition of some of the 2 new board members as well that have been made. And remember, Kalanick contends that the fellow board members of Uber are moving too fast. They're going ahead with a lot of dramatic restructuring. He wants to delay this decision making. And the proposals are the latest flashpoint that is going to happen between Kalanick and the Uber investors. On that note, we wind it down right here on the show. Thanks so much for watching. We'll catch you same time tomorrow.